So the green streak lives on. I just had one of my biggest green days of 2023, making over $16,000 in profits. I ended up making 8 trades today, had 6 wins and 2 very small losses. With that being said, I got to give a big shout out to the Team Trader Society. We crushed it both ways on calls and put options. Top G ended up playing calls at the exact lows. He also played puts at the exact top. Jim C ended up making over $30,000 in profit. In terms of the team collectively as a whole, we absolutely crushed it, man. And the green streak lives on. This was one of our most successful days. We had 81 people go green, only 4 red. The results are speaking for themselves, and the trades were absolutely insane today for bigger wins. I'm going to be breaking it down and recapping the trades, and this is going to show you how predictable trading can truly be if you trade the 30-minute chart. I'm going to break down the trades. I'm going to break down the price action. I'm going to help open your third eye, and you can use this information heading into tomorrow. Towards the end of this video, I'm going to prepare you to trade the best setups at the best prices with our newly updated levels. Let's get straight into the analysis. So in terms of the day, if you watched yesterday's video, I told you guys the daily chart was looking bearish to me in terms of the short-term micro price action for today. SPY did end up having a gap down. With that being said, I was interested in doing put options at the gaps. There was a gap to fill right here at the 436 gap. I did do puts on that gap, and I made a 30% return on 0 dates in less than 5 minutes, buying those 436 puts barely out of the money and then selling in the money when it dipped at 435.50. I'm going to show you how I was able to sell the exact low and get in towards the top on that. Let's break it down step by step. So first things first, let's discuss the 30-minute chart. If we were to just trade purely based off the 30-minute chart, today was one of the most predictable and simplistic days to make money trading both ways. Everyone should have been green today. Let's break down the 30-minute chart. So first things first, let's start off with the 30-minute chart. SPY ended up gapping down. When SPY gaps down, we avoid puts. We wait until the gap fills. That's what we end up doing. Now, I did end up making $6,000 at market open doing puts on the spikes 3 times. I did very well on that. But in terms of 30-minute direction, there was no 30-minute candle, and that was just me scalping and trading the 1-minute chart against the overall 30-minute trend. If you studied the 30-minute trend, all SPY was doing was forming the same exact 30-minute bullish candlesticks as yesterday. You can see right here, it has a nice bullish doji, a nice bottom wick on the 30-minute. It has a nice bottom wick on the 30-minute. What does it do after that? It continues to spike. It continues to spike. You can see right here, you have this nice bullish hammer. You have this nice bullish hammer. What does it do after that? It continues to spike. It continues to spike. And if you watch my videos, we discuss how all the time we avoid puts when SPY gaps down. We wait until the gap fills. And I've been telling you guys, study the puts once the gap fills at major resistance, which was 436. And then there was also a gap at 437 that we were targeting. As you can see right here, the gap at 437. For those of you who watched the videos a couple days ago, we discussed 437. We discussed 436.50. And what did I tell you? I told you to wait until a bearish 30-minute confirmation. And as you can see right here, take a look at this. It's going green and bullish just like yesterday. It's going green and bullish just like yesterday. Literally the same candlesticks and confirmations for calls. As soon as we formed a red bearish doji, it had a very nice drop after that. So you tell me, is that predictable? You wait for the major resistance to hit, you wait for the gap to fill, and it works best on levels that have not been tested. There was a level that was not tested right here at 437.20. And the reason why this is so significant is this is a gap, and it's going to try to reverse once it closes this gap, once it fills this empty space. You can see a gap down right here. A very nice bull trap where the bulls got trapped was created at 437. So if it's going to go from 437 all the way down to 431, the most likely outcome is it crashes when it goes back to 437 if it forms a red bearish 30-minute candlestick, which it did. And you can just visually see whenever SPY does that on the initial reactions at key resistance or when it fills an overbought gap prior to having an overreaction to the upside, it tends to sell off. That was a very nice confirmation for put options. I ended up doing puts earlier than that, and I cleared almost $8,000 on that. I hit puts when the gap filled at 436. That was me using the 1-minute chart and the 5-minute chart. I was well aware that it was consistently going up up and that the overall trend was going bullish on the 30 minute. But if I see a great trade to scalp against that, I might take it. And I saw a great trade where the 436 puts were beginning to go out of the money. And Steven and Top G and I, we were discussing that we were interested in doing puts once the gap build. And he gave me more confidence to pursue that trade. And I took that trade right here when it was uptrending right here at 436. I took it. And then it had a small little spike. I held it. And then I said previous closing price is rejecting, reacting as a resistance. And then it had a very, very nice drop to 435.50. This move right here where I bought puts for a nice little quick 40-cent drop here within a couple minutes, that was a 30% win on 0 dates. And how was I able to sell the low? I'll show you exactly how I was able to sell the low on that. You can see right here there was resistance. SPY had resistance at 435.60. And then it broke above resistance. So if the previous closing price in the gap reacts as a resistance, bearish rejections continuing to drop, bearish rejections, lower highs, many bearish confirmations on the 1 minute to 5 minute chart towards the previous closing price, what they're going to try to do is they're going to try to drop it back to the previous resistance where the bears got trapped, which is 435.60. And then when it drops to 435.60, they're going to try to turn it into support because the overall trend was still bullish on the 30-minute chart because the previous candles before that were green and bullish on the 30-minute chart, meaning they're going to try to turn this previous resistance into a support level, which is why I sold as soon as it formed this green bullish on the 1 minute candle at the previous resistance. Now, let's go even deeper into the 30-minute chart and show you how predictable and how crazy this truly gets, right? So I'm walking you through all the opportunities with our strategies. I'm walking you through the trade recaps that we were doing as well. Let's get into this now. So in terms of this price action, I want you to take a look at the pattern. See this red bearish 30-minute candlestick right here and see how it forms this red bearish candlestick 30-minute right here. Same exact pattern. What happened after that? It had a very nice drop. That's your confirmation for puts. Now study this. This is how I was able to bottom tick calls. This was the best trade that I made on the day. It was a legendary trade where I ended up buying calls at the exact lows, going extremely heavy. And I'm going to show you how I was able to do that. So how was I able to buy calls at the exact low of day? First of all, look at the 30-minute pattern. You have this red bearish trend reversal top wick, and then you have a big sell-off, right? For 30 minutes. You have this red bearish candlestick top wick, and then you have this big red candle, right? What happens after that? It goes super bullish. And that wasn't the only time it did that. You can see it did the same exact thing, and this is how I visually saw it. To me, this looked bullish, but you can see right here, this is exactly what I was looking at as well. Take a look at this one now. You have these two sideways bullish uptrending candles. You have these two sideways bullish uptrending candles. Then you have this bearish trend reversal on the 30-minute. Then you have this bearish trend reversal on the 30-minute. Then you have a nice pullback. Then you have a nice pullback. What happens after that second 30-minute closes red? It goes bullish. And I hit that trade. I took the same exact trade, the same exact pattern. I hit this one. We went over this in my videos on June 23rd. I did that same trade and banked on calls. And what was another confirmation to get on calls? Look at this. Look at where the previous resistance is, man. Look at this. So take that pattern that I just gave you, and now watch how bullish it gets right here if you do this. I'm going to show you. Look at this. Take a look at this. This right here, look at this. You see the resistance? Your resistance is at 434.55. Major crash. When it broke above 434.55, major bear trap. It had a major breakout. So what do I tell you all the time? If it drops back to that previous resistance level where the bears got trapped, that's where you buy the dip. And not only that, this confirmed it. Look at all of the bullish bottom support wicks where the bears are getting absolutely trapped at 434.50. You better believe me, if we're having a massive overreaction to the downside to retest the lows with that bottom wick, and that is confirmed strong support because SPY used to be resistance there, but it had a massive breakout. Now they're forming a floor at previous resistance with that overall bullish uptrend, plus that pattern that I showed you on the 30-minute chart. What more confirmation would you need to be in calls? And that's why I was so confident in that trade, and I went so heavy, and I held it for such a long period of time. I held that trade literally for like 25, 30 minutes, man, and it was such a nice trade. And I sold it towards the exact peak. Literally towards the exact peak, I sold that trade at 434.50 on the high of this, and then I left a little bit runners, and I sold it at 35.70 and 35.50. Those are my sells towards the exact peak. And then I told people, if you want to buy calls again, wait for it to retest the lows. And as soon as we retested the lows, I didn't buy calls. I was already done for the day, but I gave them the trade idea. As soon as we retested the lows, I saw a lot of people start buying calls. They were all saying in the chat, I'm in calls, I'm in calls, I'm in calls. The 0-date 436 out of money strike was at 3 cents at the lows. And that's where I told them to buy. I told them, you want to buy calls? Wait for it to go back and retest the lows. And it was at the exact lows. They were 3 cents. The 436 out of money calls, the 0-dates, were 3 cents at the time. 30 minutes later, they went to 90 cents. That's a 30x return. That's a 3,000% return in less than 30 minutes, man. We absolutely crushed it. This was a very simplistic day. I really hope that helps open your your third eye and how to read and identify patterns using the 30-minute chart. We're waiting for these 30-minute candles to close. We're interested in where the oversold and the overbought levels, where the bulls and bears are getting trapped. I didn't tell them to do anything towards here because it was already kind of played out and it's towards the middle of the channel. If you want puts, then wait back towards the top. If you want calls, then wait back towards the bottom. Fuck the middle. Why would you want to try to win a battle when you can win the war at the most overbought and oversold levels with the best risk to reward ratio and the best possible chance of winning, man? So with that being said, that should really help you identify that. And let me know in the comments how you guys did today. And let me know if you saw in terms of the patterns that I was seeing. This was all alerted real time within the chat. I shared with them all the patterns. I shared with them all my trade alerts in real time. And this was a truly phenomenal day. And I will say this was one of the easiest trading days, in my opinion, in quite some time. We found this to be a very, very overall easy channel day with the 30-minute chart, man. It's so simple. How simple is that, man? Look at how simple this is. There's resistance right here on the SPY. Look at the resistance. The resistance is at 435 and 434.50. This is your resistance, right? It's getting absolutely crushed. Well, once the SPY broke above, when did the craziest bear trap got triggered? It got triggered right here. When it broke above this 434.50 level, it had a nice breakout. So if they're going to drop it right back down and SPY has a gap that's waiting to fill above, it's probably going to rocket and fill the gap. And then if they're going to drop it right back down with all the confirmations I gave you, it's going to try to double bottom like we discussed. And then in terms of bearish opportunities, being bearish was so simple. There was a gap to fill right here at 437. It formed the red bearish confirmation on the 30-minute, and then it had a nice drop. There's your opportunity for to make money in puts, man. And you have to take advantage of people's emotions. Do you know how emotional people are when this goes from 437.50 all the way down to 434.50? A 3-point drop in less than one singular hour? You better believe me, if it retests the lows with all these nice bottom bullish wicks, we're buying calls. Why would you want to buy puts all the way down here when the SPY is setting up for that bullish pattern on the 30-minute pattern that I showed you guys that nobody was talking about? But not only the pattern, it's common sense. Look at where all the buyers are. Look at where it's spiking. These are very, very strong bullish wicks. If it's going to have a crazy overreaction to the downside, then we're buying calls right here. And if it's going to shoot right back up to 437, the high of this wick, then we're going to try puts right there, man. That's the game. Wait to trade the best setups at the best prices. Now, in terms of my thoughts for tomorrow, and if you do want to be a part of Trader Society and trade with my group, it's going to be the first link down below in the description. As soon as you join, it is a one-time fee and it's lifetime access to everything. You get lifetime access to all my real-time trade alerts, my watch list, my real-time trade analysis. You get access to everything, all the moderators, the networking opportunities, the video lesson library, the course, the live trading, voice channels. Everything is included in there if you want to be a part of it. Now, in terms of the levels that we're going to be watching for tomorrow, what the daily chart is telling me is this can go either way. So this is what I'm going to say. It could gap up. Now, if it does gap up, I will be interested in puts tomorrow. So if we do gap up tomorrow, I will be looking to target puts. And my levels that I will be targeting puts on are going to be 439. There's a gap to fill right here at 439.46. It just worked perfectly at this gap. Notice how if you watched my videos a couple days ago, we made this very, very clear. If you want to scalp puts, do it at the gaps. This gap right here at 436.50, it rejected. Puts worked. This gap right here, 437.20, it rejected. Puts worked for scalps. This gap right here is waiting to be tested. 439.40. It's the best level. I would do puts very, very heavy once we go to 439.40, right? So 439.40 is my current best level for puts. If I get stopped out, take my small loss, or if I win, I just wait for next best level. 442. 442 is our next best level, right? So that's what I want you to understand in terms of put options, and just wait for those best levels to hit, right? Now, in terms of call options, I will continue to try to buy this dip. There is a dip at 430, 450. I am very interested in trying to buy that dip. My max pain will be right here towards $434. So in terms of puts, I love 439.50. In terms of calls, I like 430, 450 with a tight stop. Also, if I do get stopped out, if I win at 430, 450, I will look to rebuy calls right here at 433-ish. 433 to 432.60 are more levels that I like for calls. Now, another thing I'm going to say is if we do gap up, wait for a 30-minute red candle at major resistance. And the two levels that I'll give you for that is going to be this right here. We have a lot of resistance in the 438s. If you see a bearish 30-minute, you could try that. And then our best level is the gap at 439.50. That's what I can say in preparation in 1 day in advance. What you guys need to understand is these videos, I can only share so much within 1 day in advance. We make trades on the spot. Once chaos is created, once we're seeing, crazy overreactions to the downside, crazy overreactions to the upside, stuff like this, where it just goes absolutely crazy, we're trading these, man. We visually see there was a crazy bear trap traded right here. If it's going to have a massive breakout and then just sell right back down, we're going to be buying that dip, and there's more to it. I shared with you the 30-minute patterns with the reversal. I shared with you the previous resistance was reacting as support. That means it's overall bullish. This resistance is now reacting as support, overall bullish move, right? So those are some tips and tricks that I'd share with you as well. But in terms of in advance, like I said, 439, 438, red bearish 30-minute candlestick. If we gap down, we're looking at calls 430, 450. We also love 433 to 432.50. Keep in mind, and if we gap up, like I said, keep an eye on the 439 to 438 zone with a bearish 30-minute red candle. If we gap down, look for some sort of bullish candlestick at a key level, whether that's 434.50, right, or 433.50. Look for the bullish overall zones. And look for something like this, just a nice bullish candlestick, ride it back up to fill the gap. Very, very simple, man. We don't have to predict anything. We don't have to swing trade and say, oh, is it going to gap down? Is it going to gap up? Are we going to flip the coin? No, just wait for someone to get trapped. That's what we're doing in the morning. The bears got trapped. I was a bear. I made money because I understand how to scalp a 1-minute chart, even if I'm going against the overall trend. But with that being said, the bears got trapped in the morning. So if the bears are going to get trapped and it's going to skyrocket, wait for it to go back down and then just buy the dip with the confirmations. But it's not as simplistic as that. These are very strategic with the confirmations. I shared with you the patterns, man, on how simplistic and how real this is. I'm not going to keep repeating myself. Just go back and rewatch this lesson a couple times for it to click. With that being said, I'm going to be signing off. In terms of our macro levels, these levels could take time to hit. We love puts at 442. We love puts at 439.50. We love calls at 431.50. We like calls at 432.50 to 433. Right now, we're towards the kind of upper middle. We're kind of just in the middle of the overall channel right now. It's more of a battle. But use what I said, man. If we're gapping up, wait for a 30-minute red, do puts 438, 439. If we're gapping down, look for confirmations on calls for reversals, 430, 450 to 433.50 to 432.50. With that being said, if you want to be a part of Trader Society, it is the first link in the description. I'm telling you guys, now is the best time to invest into yourself. It has never been easier to be great if you understand how to master trading candlesticks, how to master trading price action. And that is something that I've truly mastered in this life, and I'm going to continue to do it and continue to teach you how to master it as well. With that being said, is the first link down below in the description. I will see you guys tomorrow live at Market Open.